Welcome back. The intraday pullback in the Nifty continues. Now we're down 320 points. At the lows today, we were down close to about 500 points. Let's find out what dealing rooms are talking on this manic Monday. Nimesh is here to get us an insight into that chatter. Nimesh.
Hi Rima, so as you rightly pointed out, a bit of an intraday reversal, but flows are still very negative is the initial feedback, at least for the first couple of hours from daily room. So the relentless selling from the FIs continues largely in the financial names, and hence that's been the big drag on the Nifty as well as the Nifty Bank is down the most. In terms of reversal, there is a bit of flow reversal from Friday. So Friday we saw a bit of metals getting sold and technology getting bought. That's getting reversed today. So there is a bit of buying back in the metal names, and across the board the sense was there is a bit of selling in the technology stocks, mostly the large cap technology names as far as the FIs are concerned. So that's clearly playing out. A bit of buying from the domestic mutual funds, but I guess the key to the domestic flows will be what happens to one of the largest insurance company. If that comes and buys, which typically happens post 11 o'clock, that can change and support the market to some extent. But still, from an FI point of view, there has been relentless selling. The other space which is getting clearly punished is the crude sensitive sectors. So autos, aviation, FMCG, all are getting sold and aggressively sold by the larger FIs. So that pocket seems to be having pain point as far as the flows are concerned. I guess from a technical point of view, this current range of 15,800, 15,900 seems to be a very critical level to watch out for, because that was the consolidated level as well, if you look at the 6-month average. So that's an important level to watch out. Maybe you'll see a bit of a rebound from those levels, and that's playing out as well. But I guess if that is decisively taken out below 15,800, the next level, technical level is 15,400 odd level. So that's something to keep in mind. But from a flow point of view, at least for the first half, the feedback is relentless selling continues from the FIs and a bit of nibbling from domestic funds. But need to see how insurance players play out, at least in the second half.
Nimesh, thank you very much for that. Let's take this discussion forward. Jigar Mistry, the co-founder of Buoyant Capital, now joins us. Jigar, morning, and thanks so much for joining in. While the situation continues to remain very fluid and tense, what we've seen in the past, say in COVID 2 years ago, that decline that COVID provided turned out to be the best buying opportunity for investors. Once again, we've seen the markets fall 2,500, nearly 3,000 points from the top. 18,600 was the high on the Nifty. Is this a good buying opportunity, or is it different this time around, the approach to buying when there is geopolitical tensions?
Good morning, Rima. No, I think, while the headline indices are not down as much, if I look at the distribution of stocks, there are some 30% stocks which are down more than 30%, 16% which are more than 40% down, and 12% which are more than 50% down. So, there has been, on the broader market, there has been a decent sell-off. So compared to COVID, this endgame is very different, right? In COVID, you didn't really know how the things would pan out, right? None of us had actually seen another pandemic. Wars, to a certain extent, one can assume that eventually the rationality prevails. And therefore, to a certain extent, it is in one's hand to ideally position and price an event like this, right? So to a large extent, I would say even with the crude fallout, right, I can put numbers to things and situations like this. India imports, say, 1.5 billion barrels a year. That's 5.5 lakh crore of impact. You sell 14,000 liters of petrol and diesel, so 3.5 lakh crore of cost is passed on to consumers directly, consumer plus government. So government reduces excise by 10 rupee or 15 rupee, and prices effectively go up by 25 rupees, combination of two. So essentially, how this impacts corporate profitability is the only thing that one needs to see. That is part one. And part two, I came onto your show on the last day of the calendar year and said, look, there has never been a 7th year positive. But had you asked me at that point in time that list your top 10 risks, I would not really have listed an armed conflict as a potential risk for 2022. So while we are, so close to the situation, reading it on social media every day, we think that this situation is going to be there for the rest of the year. I don't really think that's how it actually pans out. And therefore, we have to let go of this, sporadic flows of emotion and focus on what the fundamentals are. And I don't really think they are going to be as bad as we are fearing.
Okay, if it's not going to be as bad, then Jigar, where do you allocate some money?
Hi, Nigel. So I think a lot of interesting spaces, right? Unknowns are unknowns, but what we do know is that the economy has been in a reasonably strong space. Even if you cannot find the 2 odd lakh crore that I just said was missing from the whole equation, the BSE 500 profitability is 15.5 lakh crores, right? So there is a impact for 1 year, which should impact valuations by say 6, 7, 10% at max. We have fallen a lot more than that. A lot of other sectors are falling a lot more. I would really, not bet on the status quo happening, which means that you're not buying into commodity names or crude beneficiaries. Rather, something like an insurance, a banking. Those are the names which are very interesting to us. A few, chemical names are interesting to us. Pharmaceuticals is interesting. Tech, we have historically held companies like Cyient, eClerx, HCL Tech, First Source. So those are the names which look pretty interesting to us even today.
Hi, Jigar. Morning. Now that it's possible to also start buying these international stocks, is that something that you're recommending? And what percentage of a person's portfolio should ideally be deployed towards that?
Hi, so very little understanding into how the rest of the world behaves. I think, Rima introduced this session saying there is a decent recovery. We are down only 350 points now. So I had to actually go back and check if that was actually true. So limited understanding. I think we can bet on things we understand in India better. Diversification is something one needs to do eventually. LRS does offer that. So I think $250K is, I think, what one can do if somebody understands that part of the market well and good. Otherwise, as I see today, decent and more opportunities in the Indian market as it is.
Always good hearing your thoughts, Jigar. Stop by for a short chat, but we'll catch up with you rather soon and and look forward to your views as well. By the way, we're still holding at around that 15,890, 15,900 odd mark. Let's see whether or not we can build onto those gains. For the time being, we'll slip in a short break. You come back. We'll get you more on the markets on the other side.